Hey everyone, it's Any aka the Knock Trader, your friendly neighborhood swing trader, back again with another video. Now in this video I'm going to be talking about ascending, horizontal and descending channel patterns. You know what I'm going to ask you to do next? Please like and subscribe and share my videos. I've got Facebook, Twitter and Instagram at the Knock Trader on all social media platforms. Now let's get into the video. So in this video I'm going to be talking about my favorite pattern. You know, that the one that I'm always looking for and the one where I make my most money off of, and these are channel patterns. Now there's three main types of channel patterns. You've got ascending, this one on the left, horizontal and descending. So now with ascending channel patterns, as you can see, it'll rise, it'll peak and trough, and it'll be making higher highs. So every low point will be higher than this previous one, and the two lines that are the supports and resistances will be parallel to each other. So as it starts making higher highs, which is where it will make a new high and make a low that was higher than its previous, make a new high, make a low that's higher than its previous, it will make like a staircase pattern upwards. Now, a lot of times, the way you can make your money in these types of trades is very easy, which is why I love trading these patterns. The minute it hits a high, you can either short it and then set your stop loss just above the resistance, or you can go long or buy when it hits the support and set your stop loss just below the support, and then just ride it up to the next high. So this is a very profitable strategy, and I love trading it because you can trade it both ways, and it's a very consistent pattern when you catch it early. Now you don't want to get burnt because you never know when it's going to break out of this pattern. So what I do is that I always set the stop loss really tight, because you never know at one point it's going to break out. Sometimes it could break out to the upside and break the support, come back down and then carry on going up. If it does that, you can still make money, and what you can do is that you can wait for it to break out and then hit the old resistance and act as a support, and then set the stop loss right below the resistance, right below the new support, right below wherever the old resistance is and the new support is, which is the same thing here. And then it'll carry on making high highs. Then you can set your stop loss just below it, and then keep rising the stop loss as the price retraces and makes high highs. And inversely, you can do the same for if it breaks out of the support. But there's more of a strategy that goes into breaking out the support. It will retrace. Sometimes it will retrace back to the support and come back down. But I'll make another video about that, because this doesn't really do it justice. Actually, let me change this, because this doesn't really give the full picture as to what happens when it breaks out of the support. What you want to see is it goes down, come up, and go down. But I'll make another video explaining how to trade breakouts of channels. And with the horizontal, same again. You'll see two horizontal supports and resistances, and the price will range between these two supports and resistances. You can make your money just in the same way as before. Buy at the support, sell at the resistance, short at the resistance, and short at the resistance, and then exit at the support, and just keep doing that. Set the stop loss just below the support or just above the resistance, and you can make your money up and down in both directions. Once again, the breakout to the upside, what you want to do is wait for it to consolidate on the old resistance, and then set the stop loss right below it, and then wait for it to make high highs and carry on raising the stop loss as your price retraces, and you do the same for the price on the way down. And descending pattern, much of the same again. So descending pattern, two parallel lines going downwards. Once you identify the pattern and the two parallel lines are formed, you can buy at the support and sell at the resistance. A lot of the times with descending, what you find is that the price falling is more rapid than the price rise, so you can make your money probably quicker on the decline than on the rise. So if you're a bit more impatient, you don't want to wait longer time period for the rise, you can just have a short bias. Same as before, you can make money once it breaks out to the upside and wait for it to retrace back to the old resistance, which acts as a new support, and set your stop loss just below it, and then rise the stop loss as it starts making high highs and retracing, and you can do the same to the downside. But yeah, these are the 3 different types of patterns. To be honest, give me a second. So these are the 3 different types of patterns. Now let's look at it in a live action. Once again, it's always good to see them in their theoretical form, but sometimes the best way to show them is what they look like on a real chart, because they never look as clean as they do in a practice account. I mean, in the theoretical books. So I'm going to look at JetBlue, which is JetBlue, the air company, the US air company. As you can see, this is it's a descending channel pattern. See how I paused there like a kid's TV program for you to respond. So yeah, so it's made a high here, it's gone down here. So sometimes it doesn't even reach the support, the resistance, but it's dropped down here to the support, gone to the resistance. So double bottomed here at the support, gone to the resistance. Support, resistance, and now it looks like it's coming down again. So if I was to enter this trade, you know what I would have done? I've explained it before. What I would have done is that I would have put this is where I use the 15-day simple moving average to execute my trades, but that's for another video. But I use the purple line to determine when I'm going to enter the trade, so I would wait for it to go down a little bit, consolidate on the purple line, which is the 15-day simple moving average, no, exponential moving average, sorry, the 15-day exponential moving average, and then I would short here, and then set my stop loss just above this line here, so that's just above the resistance, and wait for it to just rally all the way down to the bottom, where I'll sell for profit. I'll do the same if I was going long, so I would have probably waited for price to, if I was here, I'd wait for price to go to about here, buy, and then just hold it, even if it goes up there, hold it, and then sell it here. So yeah, this video is just all about channel patterns. You know, if you watch my pick of the weeks that I do every week, you'll know that I'm really biased towards channel patterns, because I really see a lot of potential profits within these type of patterns, because they're so easy to predict their motion once you identify one. So I always try and trade these the most, and this is the pattern that I make my most profit with. I hope this video makes sense, and if please, once again, like, subscribe. Come on, let's get my channel to 10k, 20k, 30k, so I can quit my job. Alright guys, Nock Trader signing out.